Do you want to save $5,000 to $25,000 on your closing costs? Listen up. Once your lender approves you for a loan, you're not quite at the finish line yet, guys. You're still going to need to pay for closing costs, which are upfront fees related to the mortgage. Buyers can expect to pay between 2 and 5% of the home's purchase price in closing costs. For example, if your property is worth $500,000, you could pay anywhere from $10,000 to $25,000 toward these expenses. But there are ways to reduce your costs. Okay, so I'm going to go over 6 ways to reduce these closing costs. But before you get it too far into the mortgage process, learn your options for waiving or lowering these closing costs. So 1, review your loan estimate. Once you apply for a mortgage, your lender must provide a loan estimate within 3 business days. All right, this standardized form details your loan's terms. It includes the interest rate, monthly payment amount, and the closing costs. All loan estimates are formatted the same way so you can make an apples to apples comparison across several loan offers. When you get your loan estimate, review it to understand your lender's fees. Some are non-negotiable, but others have flexibility. And for instance, you may be able to shop for title services and save a few $100s. Other administrative fees the lender charges at closing may be negotiable, especially if there are vague, itemized charges. Ask your lender for an explanation of exactly what these fees cover and push back on what you feel are excessive ones. You may be able to get them reduced or eliminated. Second, you can lower your down payment. Okay, so consider reducing your down payment and using the funds to cover your closing costs. Check with your lender to see if a smaller down payment is acceptable. So, lowering your down payment may impact your loan in a few different ways, and it's important to really grasp this, okay? It increases the amount you borrow, so it may increase your monthly payment. If the larger monthly payment pushes your debt to income ratio too high, you might not qualify for the mortgage anymore. So you'll also pay more interest over time and private mortgage insurance if your new down payment amount is below 20%. Number 3, discuss what the seller pays for. In some cases, the seller may agree to cover certain costs. These are known as seller concessions and may include things like closing fees, home repairs. Some mortgage programs have rules on what the seller can cover. So you'll need to check with your lender first and then negotiate with the seller. Generally, it's easier to negotiate if you're in a buyer's market. Currently, right now, we are in a seller's market. Okay, so number 4, consider a no closing cost loan. A mortgage with 0 closing costs might sound too good to be true, and guys, in some ways it is, okay? So lenders that offer no closing cost loans cover your upfront fees, which is great if you're low on cash, correct? But they'll usually increase your interest rate to make up for the cost. And while you might save money during the first few years of the loan, those extra interest charges may eventually surpass your initial savings. Alternatively, the lender might allow you to roll closing costs into the principal loan balance. Again, you won't have to come up with the cash at closing, which is very helpful, but you will end up with a larger loan and paying interest on those closing costs over time. Number 5, look for assistance. Closing costs can be a barrier to homeownership for low-income buyers, so most states offer programs to help with this expense. Aid may come in the form of like a grant or a loan, and it's typically awarded, by the way, to first-time home buyers or people with incomes below a certain level. So check that out. Check with your state's housing finance agency to see what's available near you. Number 6, ask about discounts and rebates. Some lenders offer closing cost assistance or discounts. They often work like government-sponsored programs. So they're usually available to first-time home buyers or those with lower incomes. For example, one national bank provides a lender credit of up to $7,500 to qualifying buyers, and it doesn't require repayment. That credit can go toward non-recurring closing costs, such as title insurance and recording fees, or be used to buy down the interest rate permanently. You might also earn a loyalty discount if you get your mortgage through your current bank. Banks may not always widely advertise these rebates and credits. Just ask to find out what's available. So there are other ways to reduce home purchase costs. Closing costs can be a significant financial burden, especially if you have a sizable down payment. So a no closing cost loan can be more convenient and save you money up front, but it will typically cost you more over the life of the loan, and it could be worthwhile to pursue a different option. So negotiating your fees, asking the seller to cover them, or applying for assistance can all be good ways to lower your closing costs when buying a home. Hope this was helpful, guys, and I hope you have a wonderful day. Take care.